Scott goes out of town, and wouldn't you know it, there's big news breaking for folks who are trying to figure out how to retire. Hello, and welcome to the fastest 4 minutes in finance. I'm John Shrewsbury, in this week for Scott Inman. In today's world, it's no secret that everyone has an opinion. And nowhere in the financial world are opinions more prevalent than when it comes to a discussion of how to best invest someone's retirement dollars. In fact, I've often likened the situation to religion. Nearly everyone has a belief, and everyone is firmly convinced that their belief is right. So when a major investment firm and one of the top policy research firms in the world combine forces to study retirement income, it's about as close to an objective opinion that you can get. But when the findings of their study happen to line up with GenWealth's method of handling retirement investments, we think that's a pretty big deal. We're talking about a new in-depth report from BlackRock and the Bipartisan Policy Center. Their findings show that combining an annuity with a more aggressive investment portfolio can give you as much as 29% more income than a traditional 60-40 investment account. Also, researchers say that taking this approach also reduces downside risk by as much as 35% when compared to a standard uninsured retirement portfolio. In short, by following the findings of the study, it can give you a third more income with significantly less chance of a drop in value in your portfolio. All this data speaks to one of the biggest risks and fears that retirees face. That is the possibility of running out of money and being broke in retirement. The study also finds that by simply delaying Social Security from age 65 to age 67, you increase your retirement spending by 16% through the life of your retirement and reduce downside risk by 15%. Another principle that we have employed for our clients for many, many years. Put simply, the guaranteed income stream and the delay in Social Security affords individuals to more flexibly spend early in retirement, knowing that they will have at least a basic floor of income in the future that will address their fundamental needs. Now, certainly, if you've been a listener to our broadcast over the years, you've heard us profess these strategies as part of the GenWealth Ready to Retire process. But when major institutions like BlackRock and the Bipartisan Policy Institute announced these findings from a research study, we think it is groundbreaking news for anyone who is thinking about how to retire. Not because we want to pat ourselves on the back and take a victory lap on our competitors, but because it brings a much bigger degree of clarity to a controversy that has created confusion among retirees for decades. There was one other finding from the researchers that is important to retirees. Quoting the study, the bottom line is an optimal retirement income strategy is one that considers the totality of the retirement income toolkit. The researchers conclude taking a whole portfolio approach that protects against multiple risk factors allows for a comprehensive solution that helps increase the chances of meeting the saver's ultimate financial objectives. We would say we couldn't have said it better ourselves. And with GenWealth's 18th birthday coming up next month, we want to thank BlackRock and the Bipartisan Policy Center for the early birthday present. Hopefully, these findings give you more confidence in being able to retire and helps put to rest all the opinions about the optimal way to do it. Now, let's get on with living financially independent. That is the fastest 4 minutes in finance. Thanks for listening.